The global technology sector, as segmented and measured by MSCI, has outperformed the broader market, and significantly so, in 9 of the last 10 years, with 2022 the only blip in this record, and the underperformance experienced in this year more than made up for in the subsequent period. Whilst relative valuation multiple expansion explains some of this extraordinary record, this consistent outperformance is also a function of earnings growth from technology companies on aggregate, far outstripping that of the broader market, compounding at average rates 1.7 times superior. The technology sector is, by a significant margin, the largest element of the global index, having doubled its weighting over the last 10 years from 13% to around 26% of the index today, and even despite some reshuffling of sector constituents over this period. There is clear evidence that the adoption rates of new technology is accelerating in the digital age, enabling technology platforms and service providers to scale rapidly. This was exemplified in no clearer way by ChatGPT, which, according to research by UBS, scaled to 100 million monthly active users in just over 2 months from launch earlier this year, a milestone which took this hugely successful Spotify and Facebook over 4 years to do the same. The significance and prevalence of technology has meant that it has been raised as a topic on almost all of the discussions in the Investor Insights series so far, and today we sit down with a sector specialist, Mike Seidenberg from Allianz. Welcome to the Investor Insights podcast, hosted by Killik Co. My name is Gordon Smith, and in each episode, I'll be interviewing portfolio managers from across the investment industry to gain from their expertise in the specialist areas in which they invest, and to question them on topical issues. You can access the full series of interviews via the playlist on the Killik Co YouTube channel, or by searching for Killik Co's Investor Insights on Spotify, where you can subscribe and be notified of future episodes. We hope you're enjoying the discussion so far, and you can get in contact with us about any of the topics discussed via the email address investorinsights@killik.com. Killik Co is an independently owned wealth manager which opened its first office in 1989 and provides services to help families save, plan, and invest. And you can find more details on the unique ways in which we do that at our website, killik.com. In today's episode, we were joined by Michael Seidenberg, a senior portfolio manager within the Global Technology Strategies team at Allianz. Mike joined Allianz following the integration of the Voya financial business in 2022, but he's also worked at a number of hedge funds during his career, in addition to working in industry within software business Oracle, a period of his career he discusses briefly in the interview. Allianz Global Investors is a large asset manager with around 500 billion sterling of assets under management and over 600 investment professionals. One of the advantages this scale provides is research resource. And in this episode, we discuss briefly the company's Grassroots Research function, a group which is sent out to complete specific research projects in the shape of surveys or mystery shopping exercises and on-the-ground assessments. And we discuss some of the anecdotal insights from this function that's been provided to the team over recent years. The Allianz Technology Trust, ticker ATT, is one of 3 broad technology sector-focused investment companies on the London market. At the time of record, the 1.5 billion market cap investment company trades on around a 10% discount to prevailing net asset value, which is broadly in line with the other peers in the sector. We hope you enjoy this discussion, and as always, please get in touch if you have any follow-up questions or if you'd like to suggest topics for any future episodes of the Investor Insights series. Hi, Mike. Hello. How are you doing today?
I'm doing well. It's great to be here.
So we've got this kind of opening question to these, and it kind of aims to get a bit of an insight into you, really, or kind of how you go about your work. I wondered if is there a kind of insight into a research project you're working on at the moment, or even just a kind of interesting article or book that you could share with us?
Yeah, I recently read a book called The Sales Leader. It was about a gentleman who had worked in software sales and really, kind of tried to codify, how to make an organization really tick. And I found it to be pretty interesting. And my background is I actually worked at Oracle after business school many decades ago, when Oracle was just, a company that was just a sales machine. And I helped create a product, a suite of applications. By the way, we got our tail kicked by SAP because we were trying to partner, and what you realize in softwares, if you really should buy companies, not partner with them. And to make a long story short, so I put this application suite together, and then I went out and sold it for a little bit just because I thought it'd be great. I was young. Boy, was it hard. So the book was really spoke to me, and I like it. I mean, I think that your question is a good one in that I think that the key in this business to do well is just kind of constant, knowledge with respect to, whatever, whether it's, reading about cooking, which I love to do, or reading about, execution, what makes a good software organization. So I'm constantly, I'm constantly intaking and reading and listening to podcasts and whatnot.
Yeah, no, 100% agree with that. Yeah, no, we've had some good book recommendations. So we'll certainly add that to the list. Yeah, thank you for that.
Yeah, I read a great. I mean, this is a book more for what I call work. I read a great book about the British Special Forces hunting the Nazi bomb, which is all about the heavy water project in Norway and the British, sending special forces there and, with the help of the Norwegian, and it was unbelievably great. And it's funny, in fact, it's referenced in a lot of history in that, by precluding the Nazis from having enough heavy water, which is needed to make atomic bombs, it really changed the outcome of the war. I mean, there's no doubt. I mean, it's a great book. It's by a guy named Damian Lewis.
Fascinating.
Yeah.
Thank you for that as well. Yeah, thank you. So Mike, we're catching you the week after the US elections. So we've given you a little bit of time at least to kind of digest things.
And earnings, right? So we got the election. We have had a month of earnings. You're catching it most tired.
There's plenty going on. Yeah. I know it's a tricky question, and the dust really hasn't settled yet. But I wondered if you just had any early thoughts about the impact, specifically on the tech sector. Obviously, I mean, you start to think about kind of regulation and trade and everything. Anything that you draw out that you've?
Yeah, I mean, I think in general, look, that Donald Trump will be very pro-business. Having said that, that does add some risk to things that for companies that sell things to China, I would say at the margin. I think that that's something that is TBD with respect to, if you think about just kind of leading industries, you would really hate to disrupt the semiconductor industry as a whole. And it's just so important to the global supply chain. So I think, that as the administration thinks about things, they probably want to step fairly judiciously, or hopefully I hope they do. I think with respect to things like M&A, probably a looser environment with respect to companies being able to buy other companies, probably less government oversight. I think it's also new. And there's, so like most things in life, the worry is obviously usually worse than the reality. So, hopefully, his administration will be thoughtful with respect to the impacts on businesses, because ultimately the stock market responds, to business conditions. And he tends to be pro-business, less corporate taxation at the margin, probably, I do think that there'll be some tariffs in some way, shape, or form. But the other thing you have to think about, and I heard an interesting anecdote the other day that they said the price of a blender, could go from $35 to $42, and that's really inflationary, right? And he ran his whole campaign, or a lot of the campaign was run on, how bad inflation's been. And look, I think he was right on that, to the extent that, I think food prices are crazy. But here again, I like to cook, so I'm in grocery stores. I mean, some of the prices are shocking to me. So I hope it's a measured approach. I hope it's an approach that's thoughtful. And we'll see. I don't feel like our portfolio has a lot of exposure to Trump specific. Having said that, we do have exposure on the semiconductor side that goes into China. We don't have any Chinese investments as pure plays, and we really haven't since prior to the pandemic. And I really credit goes to my team who got us out of China when they saw the new regime take place, and really didn't think they'd be pro capitalist, pro shareholder.
Yeah, no, thank you for that. Some important points in there. Mike, I think the ATT strategy is kind of quite well known, I think, for kind of hunting in those kind of mid cap and large cap rather than the kind of super mega cap kind of areas. Yeah. I think we'll come, if I may, kind of come back to those kind of segments a little bit later. But just given that the kind of, you look through the last kind of 12 months, just so much attention has been on AI spending and those kind of really large, whether it's the enablers, the chips, or the platform businesses.
Yep.
Could I ask you to, I mean, it just after such a run, it always leads you to say, or it is a kind of, whether it's a CapEx slowdown or a slowdown of some sort coming, or are valuations stretched in some of these specific areas? Could I ask you to maybe just summarize your stance there? Any kind of...
Yeah, I mean, I think our stance remains fairly consistent, which is we're kind of taking, kind of two different vectors. One is, as you alluded to, it's, it's really thinking about the enablers, right? It is companies that are enabling companies to whether it's a chip provider, whether it's a TSMC, whether it's Taiwan Semiconductors. Sorry for those of you on the call. I try not to speak in acronyms. Whether it's thinking in terms of companies that facilitate various aspects that make a data center better, whether, we have a variety of what I call first and second derivatives around that. And then it's companies that I call, companies that basically use artificial intelligence in their business. And I actually got the terms mixed up. We tend to think about picks and shovels is which I was just talking about, and then enablers. So although, you could use the enabler word of the first one, but I think in terms of picks and shovels, which we just, chip companies, power, connectors, et cetera, all the stuff around the data center. And then I think about enablers, companies that are using artificial intelligence to make their products better, right? So a company like a ServiceNow, which has an AI SKU, an AI product. Gosh, I got to stop speaking in analogies. And an AI product that their customers are really gravitating to, and it's driving sales cycles, and it's making it easier to get through a fairly difficult environment. We have a whole list of those companies, and I think that's probably the right way to think about it. Look, I worked for a gentleman early in my career who's just a phenomenal tech investor, and he reminded me that secular themes play out longer and harder than investors realize. And what he meant when he said that was the journey, if it's truly secular, isn't about 12 months, right? It's about, 72 months, right? And if you go back and look, and it could be even longer, if you go back and look historically, if something's truly secular, and there'll be ebbs and flows, the value creation from a stock market perspective is really impressive, right? The cloud, software as a service, cybersecurity. These are secular themes that have been around and have continued to pay dividends, not actual dividends, but for investors for a long time. I remind myself that. So when I get a little worried, look, and obviously we, there are like every portfolio, we vary our position size. When, we had a company report this morning at 5:30 a.m. It was an okay quarter. It wasn't a great quarter. We own it. Stock's down a decent amount this morning. And we'll probably trim some, but I'm not selling it all because I really think they're one of the winners. So I think that part of the job is to really figure out if something's secular, to make sure that you don't let it pass you by, because if the stock doubled and you're like, oh my God, it doubled, we got to sell it. And you're like, no, let's go look at the next 3 years worth of revenues. And ultimately, everything comes back to risk reward and valuation. Like that's pretty much the simple framework to use from a stock perspective.
Yeah, no, thank you for that. Mike, we talked a lot about the kind of dispersion of markets and the kind of high concentration. It has been evident in the tech sector as well. I wonder if we could explore some of the slightly smaller end of the market and then kind of where you're exposed there. Could I ask you to give some examples of kind of areas of technology you're exposed to, perhaps the slightly lesser well-known areas that kind of feature in the portfolio?
Yeah, I mean, we own a variety of, the trust owns a variety of companies. And, if I think about, our exposure to cybersecurity, right? It's not necessarily the names you would expect. One of the names that we own is a company called CyberArk, and we've owned it for multiple years. It's not on most people's radar screens. They actually make a product that provides access as developers need to get access to the root of a system. And that's applicable to the cloud and applicable to on-premise. They started an on-premise Israeli company, really good technology. And basically, if you think about it, and if you're a company today, you want to know that if Gordon went in there, what did he do? Where did he come from? Wow, that's interesting. Gordon is now coming from Russia today. That's weird. I wonder if we should block him, or I wonder, why would he be looking at source code from Russia when he typically works in the UK? So they basically monitor people's access, or what we call ingress, egress, to those systems with full audit trails, right? And that's really important. And they also can stop people from actually, if you tried to log in from Russia, my guess is they would just preclude you from doing it as a developer. So we think stuff like that's interesting. I mean, I think that applies to not only the cloud. I think eventually you'll see that with artificial intelligence, because you want to know, if you have these large models, who's tweaking those models and what exactly are they doing? Because there's huge ramifications of that act. So that's a business that I think is interesting. They report, I think, on Wednesday morning. Quite early. There's some other, there are a number of other names that we've owned, kind of over time. I don't know how much depth you want me to get into one way or the other, in the essence of time, but our process tends to speak to more of the mid cap, large cap. We don't do a ton of stuff in small cap. HubSpot is another company that kind of comes to mind. It's a software company that we've owned for a long time. Here again, they've had their, most things in life aren't straight lines. So, it's been a good stock over time. It hasn't always been a good stock, every year. But they have a suite of applications that they sell to kind of medium-sized businesses that are very integrated. They too are applying artificial intelligence to their products, and we think that they have a good chance of being successful, primarily because if you think about one of the key competitive advantages in artificial intelligence, it's really unified data. And in the case of a company like HubSpot, they really haven't done a lot of acquisitions. So the data that they have is all it's all the same. So they don't need to go back and cleanse it and relook at it. And I think that's an interesting business, probably in, a better buying environment. You could see their business accelerate next year. Whatever. I mean, the list goes on, but I mean, I think suffices to say our process is really a mosaic, and that mosaic is to go out and listen primarily. And we want to listen to, we want to listen to system integrators. We want to listen to, chief security officers, chief information officers, go to user groups and understand, why do people like these products? And if so, what makes them great? Like if you've ever seen me on a call with a management team, one of my kind of key questions I'll ask them at some point is, tell me about 3 products that you can't do your day without, because that's really interesting to me. Because I want to know, like, what are the products that when you go to work, you just can't live without, right?
Yeah, those necessities. Yeah, no, absolutely. You, in answering some of the questions previous, you've already talked about AI quite a lot and just the kind of transformational impact that it's having.
Sure.
We often try to think about kind of what is being disrupted here as well. And I guess there's kind of areas around industry I think you could point to as being potentially disrupted from kind of new areas of technology.
Yeah.
But within technology as well, I mean, you start to think about some of the areas of the software sector, for example. I wondered, are there the kind of areas that you believe could be a threat here? What are you thinking in terms of that?
Yeah, I mean, I think it's going to be important for companies to really provide value as we move into a world where there's so much intelligence in the product. So, if you're thinking you can just kind of grow seats inside an account, for a software company, vis-a-vis just kind of, natural growth of employees, that's probably a little bit harder of a scenario today or going forward a few years from now, as products become more intelligent, right? So I think that I think that, and I've said this before, I'm not assuming we go back to an environment where all of technology does well. I think we're going to be in a fairly disciplined spend environment, and therefore, to use a shooting analogy, and I don't hunt. It's much more of a rifled approach than it is a shotgun approach. And I think it's going to be important to make sure that, if you're a company, you're in that bullseye of spend, because they're definitely going to be losers. And I think that, I think it really boils down to creating lots of value in your product that you're selling to your customer. Because, I just think the days of somebody is saying, okay, well, yeah, sure. You know what? We'll buy my 5 more seats this year. Those days are over. And, for the most part, I don't think software is dead, in that, we've seen pretty solid results from software companies out of Q3. Now, the environment remains tricky. But, I think net, the death of software probably isn't something that I see happening anytime soon.
Mike, over the years, we've spoken to quite a few Allianz managers from across the piece, and they've often spoken about the grassroots research, the kind of the guys that go out and kind of really explore things kind of on the ground. I wondered if the tech team were or had used, if you kind of look back over the kind of used insights, is there anything that you can maybe share?
Yeah, I mean, first of all, I think it's a great sanity check on our investment hypothesis, right? Because if you're not back testing your hypothesis, you could be right for the wrong reasons, and that's really dangerous. I can think of multiple times throughout my career, and I've been doing this for a long time, where Grassroots has saved me. I think of it, I'll give you an example, and it's been a while, but there was a game that was released by Electronic Arts a few years ago, and we did a survey. I thought the game was going to be, well received. I thought it was going to be, sell well, et cetera. And we did a survey, and it was crickets, right? Nobody had any interest in the game. In fact, everybody had an interest in this other game called Call of Duty. And therefore, as good as the game that they had created was, it just got dwarfed by the popularity of Call of Duty at holiday. In that case, it allowed us to sell the stock before they missed the quarter. Conversely, we recently have run some surveys on some of the newer products that some of these companies are releasing, and really trying to get feedback as to, are the products, creating more efficiency, et cetera. And the results have been, pretty positive on some of the companies. Here again, I think that Grassroots, because they are non-investors and because they're really just trying to find information and think of a reporter, right? So there's no inherent bias there. I think that it's a really good additive tool to our investment mosaic. We're constantly, we're constantly kind of creating studies and stuff. And technology has been our friend here, right? Because when I started, it was all smile and dial, on the phone. And now we can send out surveys, or they can send out surveys. I have nothing to do with it, and use technology to really kind of create less friction between that particular recipient and the organization, right? And any time you can do that, here again, Gordon, it really boils down to math, and that you want a good sample size, right? This is, as somebody who's a firm believer and has taken a lot of statistics class, you don't want a sample of one. You want your end value to be a high end value.
Yeah, no, thank you for that. We've got some time here at the end. Actually, I wondered if I could maybe ask you to talk through some of the areas of the portfolio that you're particularly positive on at the moment. So, any kind of you mentioned a few areas already, but are there any kind of really high conviction areas you could talk us through?
Yeah, well, as I think about the year thus far, it's been a year where you had a lot of excitement around artificial intelligence in the semiconductor sector, and then that's kind of trailed off, as of late, especially on some of the equipment providers. Look, I remain very excited about software, primarily because the names are just cheap, and they've been cheap for a couple of years. I think that they create a lot of value, and I think at some point we're going to see that as things improve on the buying side, that people are going to look at these businesses and say they're just too cheap. And we've seen some of that throughout earnings. We've also seen companies, miss numbers as well, depending on who you are. So I think that's a sector that, that when I look at the portfolio across, all the different sectors and subsectors, that kind of sticks out with respect to just kind of how relatively cheap it is, from a valuation perspective. We're finding some interesting stories. Here again, we don't run tons of positions, so we have a lot of stock specific stories, but we're finding some interesting things in the internet, which we haven't really played in a while. If I think about a company like Spotify, which I think new management team post the IPO, really came in and re-looked at their business, and said, gosh, we need to do things more profitably. There's a whole, music has been a part of my life since I was a teenager, and I'm no longer a teenager. So I think about the monetization of that arc, over the life of somebody. And I watch my kids. I have a sophomore in college and a junior in high school, and I watch them, and music is part of their lives. I mean, if I think about, me personally, I've been listening to music for a certain number of minutes almost every day of my life, and that it's something I do. So, I think it's something like Spotify and the switching costs, and I'm like, wow, if these guys get it right, they could own these customers for a long time. Granted, the music's a little different for you guys, for your generation, it is for mine, but I try to stay attuned to the. My kids tell me who the hot, EDM people are and all that stuff. So, but I like to observe. I think it's important in our job to observe people, especially on consumer products. Like, how do they use those products? And I was at my son's family weekend a few months ago, and it just dawned on me just how big a part music was of the weekend amongst hanging out with his roommates and yada yada yada. So.
Yeah, no, absolutely. Yeah, very important to keep an eye on those consumer preferences as we kind of move down the generations, for sure. No, Mike, that's been super interesting chatting to you. I really appreciate your time. Thank you so much.
This has been great. Appreciate it. I hope you have a good day.
Thank you for listening to the Investor Insights podcast, hosted by Killik Co. You can get in contact using our podcast email address, investorinsights@killik.com. For more information on any of the topics discussed, or for further details on the services offered by Killik Co. This podcast is not personal advice. The content is intended for educational purposes only and is not investment research or a recommendation to buy or sell any financial instrument or product, or to adopt any investment strategy. The value of your investments can rise as well as fall, and you could get back less than you invested. Past performance is not a guide to future performance. The investments referred to in this podcast may not be suitable for all investors, and you should seek advice from a qualified investment advisor. Killik & Co is authorised and regulated by the Financial Conduct Authority, the FCA.